Hi, this is Michael Joyce with JoycePayne Partners, and I'm pleased to share with you our thoughts and viewpoints on the financial and investment markets for the winter of 2017. We've just been through a major change that has impacted the financial markets and the economy tremendously over the past couple months, and that is the somewhat unexpected election of Donald Trump to the presidency of the United States. Now, Mr. Trump had campaigned on a platform that was very different from any previous presidential candidate, whether Democratic or Republican. And now that his administration is in office, they're moving forward on implementing much of that platform. Now, as everybody knows, since November 8th, the U.S. stock market has done particularly well. But not every market has done well. For example, international markets went down after November 8th, although they have recovered a bit recently, and they went down based on a surge in the value of the U.S. dollar. But over the past month, they've traded more on their fundamentals and have recovered some of that gain, particularly in the emerging markets. Bonds have really taken it on the chin since November 8th. If you had bought the 10-year Treasury note in the first week of October, the yield at that time was a little bit over 1.5%. As I'm recording this video, the yield on the 10-year Treasury note is 2.5%. So that's a pretty big increase in a pretty short period of time. And if you now went to sell that 10-year Treasury note, you wouldn't get face value for it, because as interest rates go up, bond prices go down. So somebody wouldn't be willing to pay you as much for a bond that pays 1.5% interest when they can go out and get a new bond for 2.5% interest. But I would hasten to add that the individual bonds that we own in our client portfolios have actually had positive returns for the past couple months. And there's two reasons for this. First, we have been very cognizant about interest rate risk, and over the past several years have bought shorter term bonds. And shorter term bonds have less interest rate sensitivity than longer term bonds. Secondly, we do rigorous credit analysis when we're investing in bonds. So as the fundamentals of some of the underlying bonds has gone up, the credit spreads have tightened. And what I mean by credit spreads, it's the yield spread that you get on a bond that is over the yield that you get on a comparable U.S. Treasury securities. So as the credit spreads have tightened, their prices have increased, and we've enjoyed positive returns over the past couple months. Back to the Trump effect. As we go into 2017, the U.S. economy is actually in pretty decent shape. The labor markets are very tight, and there's been real increases in wages that have occurred over the past 2 years. If you couple those real increases in wages with low energy prices, that means that consumers have more discretionary income to spend, and they have been doing their job in increasing U.S. economic growth. Consumer spending has been strong, and that is very important because 2/3 of U.S. economic growth has typically come from the consumer. But what has been abysmal for the past couple years is business investment. And what I'm talking about is business investment in plants, business investment in equipment, business investment in human capital. And a big reason for that has been a lack of confidence in the business community. However, Mr. Trump's administration has come in promising that they're going to reduce the regulatory burden and introduce tax reform. And that has infused a lot of confidence into the business community, which has been somewhat reflected in the gains in the U.S. stock market. However, not all of the Trump's administration's platform may be beneficial for businesses. Most of the world's population lives outside the United States, and most of the world's consumers live outside the United States. Exporters in the United States are trying to reach all those consumers outside the United States, so protectionist policies could really hurt their businesses, as well as a probable increase in the value of the U.S. dollar. Also, protectionist policies can be inflationary, and that would not be beneficial for consumers. Now, I'd like to spend a minute or two talking about some potential changes in the tax code. There's been a lot of talk about this, and we do believe that it's highly likely that there will be changes in the tax code, and it'll be accomplished rather quickly, probably over the next 6 months. Now, a lot of the details are not yet known. There's a lot of competing tax plans that are floating around right now, but what looks like is going to occur is there's going to be fewer tax brackets and there's going to be lower tax brackets. It looks like there's going to be 3 tax brackets. But there's also a lot of talk about eliminating personal exemptions for individuals and joint filers, as well as some limitation on itemized deductions that taxpayers can take. There's also talk about eliminating the federal estate tax. Now, that would probably be coupled with an elimination of the step-up in basis on appreciated asset that one gets on death. So if you were inheriting a $500,000 home from your parents and their cost basis was $100,000, under the current regime, you would get a step-up in basis, so your basis would rise to $500,000. And if you turned around and sold the home for $500,000, there would be no tax consequence for you. However, if the step-up is eliminated, your cost basis would be $100,000, and you would therefore have a $400,000 capital gain that you'd have to pay taxes on. Now, personally, I would prefer to keep the step-up in basis on appreciated assets, even if it means keeping the federal estate tax in its current form. But there are a lot of changes that are occurring. There's a lot of details that still have not been fleshed out. And over the next couple months, we're going to be keeping track of these changes, and as the details become filled in better, and we will be communicating with you about this, and we will be implementing tactics and strategies that will help with this new economic regime. I really would like to thank you for taking the time out to watch this video. If you have any questions, please feel free to contact your financial strategist or to contact me, and I hope you have a great day.